How's it going, everyone? Mario here. First and foremost, rest in peace, Lizzie. Queen Elizabeth II has passed away, and my condolences to the British audience. In this video, we're gonna go over the detailed analysis of SPY and what to expect leading into next week. I'm gonna let you guys in on what's going on in my head after Friday's close. I got a bull thesis when it comes to the price action and a bear one. We're also going to talk about what should happen to the price in order for me to pick one of the theses and then take the trades based off of that. This video is mostly going to be based off of SPY alone. We have a separate video coming in talking about the energy crisis in Europe and the power grid crisis in California. Keep an eye out for that as well. So without further ado, let's get started. We are looking at the daily charts here. One thing that stands out: Friday's open. They gapped the tape higher above that yellow and the orange line, which is the 50-day moving average and the 100-day moving average. They not only did that, they also closed the session above this close on August 26th. You see this big breakdown candle from 419 to 405. Yes, they closed above it. So leading into Monday, the lows of this candle, which is sitting at 405, will act as support, provided they opened above it. Any open under this on Monday might push this lower all the way towards that moving averages, which is currently at 402 to 400 zone. But for now, things are not looking so bad. The question is, are they going to pop their head up above this 407.50? There is an importance to this 407.50. If you go back on the charts and take a look at this zone, this is the box which we have from May 27th to June 8th. We had this consolidation zone happening for almost 2 weeks. The consolidation zone ranges from 407.60-ish and change all the way to 417 up north. If bulls manage to get back into this consolidation box, the next zone to watch out for will be somewhere around 410.50. Now that is going to be the next level of big resistance which the bulls need to face head on. Now there are two sides of arguments which is going in my head, so let me clarify that. From a bull's point of view, the bull within me tells me that this is just another higher low from the lows of June. So what I mean by that is, in the June, if you take a look at the charts, we can see that the low or 360 has been made, all right? On 360 and change, let's say. And then they pushed higher, came back down to make another low, which is at 370. And they pushed higher to come back down to make another low at 390. So you can see there is a low, there is a higher low, there is a higher low, and then they kept on going until that 200 SMA, which they got rejected on. And now they came all the way back down at 390 before bouncing higher. The bull within me tells me that this is just another higher low from the June. But the bear within me tells me to take a look at the top of August 16th. So we went all the way to the 200 SMA at somewhere around 430 and change. They got rejected, they came back lower, and they found support at 411-ish. They bounced exactly to make what? A lower high, which is at 419 to 420. They came back all the way down, and now they're bouncing. Is it just another form or another tape to form another lower high before pushing all the way to the June lows again? Possible. See, these are the two train of thought which has been going on in my head. Now I gotta give the favor to my bear side here, because if I take a look at macro in the sense the economy in itself, if I take a look at what's going on in Europe, if I take a look at the fundamentals of the market, nothing screams bullish so far to me. So what should happen for me to pick a direction? Now I told you what's going on in my head in bull case and in bear case. So in case of bull case, if I want to stick being bullish, I need price to get above 410. I need price to get above this big breakdown candle, which is at 420. If that happens, then yes, I might turn a little bit more bullish than I am at the moment. So let's ignore all the macro factors for a while now. So macro is still bearish, I'm still bearish with my bias and all those things, but at the end of the day, market doesn't care about my bias, it's gonna do what it's gonna do. I can't take my trades based on the bias. If I short the tape when it's looking strong just because my bias is bearish, then I should kiss my account goodbye. So that's not going to happen. So let's just analyze what should happen to the price for me to stay bullish. You see this big breakdown candle on August 26, which goes from 420 all the way to like 407, 405. Now, if bull starts marching higher and starts closing candles above 411.75 and then march to the top of the 420 and then starts closing candles above the spot, then my bear thesis will be off the windows for a while. Now, the main question is, since most of you guys are bearish at the market, as you should be, what should happen for me to continue to stay bearish? Let's say we have a big gap down on Monday and the price starts closing below 400. If that happens, then yes, time to put on the bear costume on, because we are going to pummel lower. So I'll tell you why. On Friday, we closed under this consolidation box, as I mentioned before, the 407 to 417 consolidation box from June, remember that? So if Monday, if the bulls can't recapture this box and they start pushing lower, watch out for 402, and if they come back down to fill this gap at 483 and starts pummeling lower, starts closing candles under it, then yes, things are not going to look so good. If you have a long-term puts, if you go to the weekly charts, you can clearly see this is not, it won't be a good sign, because if they come back lower, they can push the tape all the way down to 390 again. And if they push it all the way to 390 this week, then if they start closing candle under 390, watch out for June lows to our $350 to $357 to be tested on SPY. Because we're looking at the weekly candles, by the way. This might take weeks to play out. I'm not talking about 2-day expiration options or like 1 week expiration options. It can take weeks or months to play out. But for now, if I want to continue to be bearish on the markets, I need the price action on the daily to close under 400 for at least 2 days in a row. So if that happens, it opens doors for 390 again to test the lows, or it opens for much lower prices to follow. This can be just another lower high from this short-term top at 430, and we can continue march lower. So let me draw it out so you can see. There is a rejection there. They formed a lower high and they came all the way back down to form another lower high. If they come back lower, we can come back all the way down to run a test to June lows. So something like this should play out. So if I want my bear thesis, or if I want to stay bearish, I want the price to close under 450 after filling this gap. Let's say like they closed the day to 400, they opened Wednesday, they opened Tuesday under 400 and they starts pushing lower. CPI comes out and they became even more bearish and starts to pummel down further. If all this happens and if they break this trend line, then yes, say hello to the June lows. This is my analysis of SPY leading into next week. Watch out for 407.60. If they break above it, say hello to 410.51, or they can march all the way to the highs of this breakdown candle at 420 by the end of this week. If they go under 400, now that's a different tape. We're going to turn bearish. If they turn under 400, watch out for the lows at 390 to be tested, and if they break under 390, then we have another scenario on our table. Breaking under 390 opens doors for running a test to the June lows. Might be possible. This is all about the weekly charts, by the way, so something to keep an eye out for. As always, so if you guys want the daily analysis, check out the Discord, check out the Patreon. I do give analysis on SPY every single morning before market open. Go ahead, check it out. Link is down below in the description. As always, take high probability trades, manage the risk wisely. I'll see you guys in the next one.